Hello and welcome to Blytheway Business News, where we've got a bit of a first for the show. We've often had on this programme gold miners telling us about their plans to dig up gold all over the world, some of them paying dividends, and how investors can benefit from investing in their shares. Well, today, we're not talking about investing in gold mining companies, we're talking about investing directly in gold, specifically gold bars and gold coins. And we've got with us the Chief Executive of Direct Bullion, Paul Withers. Paul, good morning. Welcome to the show. Before we get into the detail of investing in gold, tell us a little bit about yourself. What's your background and what attracted you to gold?
Hello, Tim. Good morning. Been in this industry about 10 years. Always a big belief. Do you know what? I had an experience once with an investment that went horribly wrong, and it kind of opened my eyes to more safe, secure options. I bought some gold. Whilst buying some gold, I ended up getting into the industry and never looked back. I've enjoyed every minute of it. It's a sector that I love, and seeing that the benefits that it offers, it just made us, me and my partner, we wanted to help and educate as many people as we possibly could in gold, and why it's so beneficial more than ever today.
Now, for people unused to investing in gold, or perhaps people who've never bought gold themselves ever, there must be quite a few misconceptions around. What are the big misconceptions about buying gold directly and owning and holding gold?
Well, there's a lot, believe it or not, of misconceptions. I think a lot of people look at it and say, this is a volatile market, it's up and down, which when you're looking at it on a short period of time, it is. There isn't really, show me a market out there that doesn't move, that isn't volatile over a short period of time. But people who buy gold, primarily, you're not buying it for a short period of time. Yeah, this is like I say, wealth preservation, 5 to 10 years as a minimum. Yeah, I think the rule of thumb is always, put 10, 20% of your portfolio in gold and forget about it.
So I buy, of my investment, I put 10 or 20% in gold and I forget about it. And I trust, I guess what you're saying is I just trust the fact that the gold over that period of time will hold its value better than investing in stocks and shares. Why is that? I mean, you've been in this game for a while, Paul. Why, in your opinion, does the gold hold its value better than investing in stocks?
It's a physical asset. You've got a tangible physical asset on your hands. With gold, and this is with the preconceived notion of it being a volatile market, I actually think gold's very steady. It's not going to give you, we always say to our customers, it's not going to make you a multi-millionaire. This is not a get-rich-quick scheme. This is a proven track record. It's been around for 5,000 years. You buy an asset that you own, you have it in your control. And typically, if you just base it on the sort of last 20 years that we've been through, you're going to see around 10% growth per year as an average. It's slightly more than that, but I always like to think of it 10%. That's a phenomenal amount in this current climate.
Now, I know we're not allowed to promote or encourage or recommend investment, especially through direct bullion. But I mean, common sense and what I'm hearing seems to suggest that if people are looking to invest some of their savings to future-proof their wealth, should they be looking at, is there a way for doing that with pensions, for example?
100%. Yeah. I mean, the pension setup in the UK, it really needs a lot of looking at, I feel. When you consider at the moment, I mean, the pension deficit, I think it's 260 billion as of October last year. Now that 260 billion is a vast amount of money. Yeah. When you look at what pensions actually do for people, you could be a 30-year-old man. And you've got to understand, there's a lot of people at the moment, especially in the day and age that we live in today, don't really focus on their future. Yeah, most people live for now. So you look at a 30-year-old man now, they've got approximately about 37 years left before they retire. I think the average wage at the moment in the UK is 30,800. So you need to put 10% aside into your pension, plus your employee top-ups. You're going to be looking at around about just over £4,000 a year going into a pension. Now, after the 37 years, that's going to increase based on Hargreaves Lansdale's calculator that they offer. Yeah, you're going to be looking at around about 240,000 when you come to retire. Now, that's a 56% growth. When you work that out, it's only 1.5% per year. That is, that's not comparable to anything for a pension when you consider the rate of inflation. Now, the last 20 years has been a little bit better, where you're looking at about 13% per year, which is great. But when you actually consider that compared to gold, there are other, obviously, things that you can put into with an asset also. But when you consider that to gold alone, if you'd have had that same amount of money 20 years ago, the 159,000 that you'd be putting from your pension now, and you put that into gold, instead of only getting 240,000, you'd be looking at over £1 million.
Well, I was going to ask you about that because, as we know on this show, I said many gold miners on here talking about, the last few years the gold price has gone up. It's traded at over 2,000 per ounce. It's quite high now. Is it going to go even? What's your view, Paul? Is it going to go even higher? Where do you see gold going in the next 5 years, 10 years, 20 years?
See, I don't see it as gold as high. Yeah, I think gold is massively undervalued. The problem that you face is you just need to spend more dollars, more pounds to buy the same amount of gold. That's what you need to understand. And that's what a lot of people don't understand, because they look at the market, again, back to this volatility stage where they say, it's up and down, but it's only the price of the dollar or the pound that's moving. When you actually consider how gold is going to be in the future, no one's got a crystal ball, but just based on our research that we've done over the past 20 years and how that's reflected to how the economy, the debt, the stock market is currently now, we anticipate growth of about 170% over the next 5 years. Pretty staggering when you consider, that's a safe haven asset that you can put in your money into. And there's a lot of talk out there that in the next sort of 10 years, we could be looking at $20,000 an ounce. There's a big reality to that. And I know it sounds like a crazy amount. When you actually consider the amount of government debt there is in the world, the massive overinflation in the stock market, I personally believe there is an everything bubble. And there is a lot of things in that bubble that once one goes, a lot of things are going to come crashing down after it.
So let's just turn it then to your customers, because I don't know how many you've got, and it will be rude to ask, but I'm assuming you've got a lot of customers, presumably all over the world, for all I know. What are they saying to you when they say, I'd like to invest in some gold, Paul? What's their big emotion?
Fear, I'd say, at the moment. That's the big worry that most people have. Currently, we deal with a lot of not just consumers, but businesses also. And those businesses are fearful, especially when you have sums of money in an account with talk of negative interest rate coming. There's a desperate need for securing wealth, and that's all I ever say to anyone, especially any new customer that comes. This is just the ultimate tool for preserving your wealth. As long as you beat inflation, you've got a physical asset there that anything could happen to us as a company. That's your product. You own that. You can sell it where you want. And that just gives a lot of people a peace of mind. They can sit back and think, at least I know that part of my portfolio is protected.
Paul, many of the viewers on this program are used to investing in stocks and shares. What's the difference? What's the pros and cons of investing in shares versus investing in gold? I mean, the stock market versus physical gold.
Most people are, Tim. I think that's got to be, you know, the number one investment out there. You know, companies wouldn't survive without the stock market. And although, you know, it's very much needed, and I firmly believe, you know, to have some of your portfolio into the stock market, I totally agree. But when you consider what gold can do for your portfolio also, I look at the stock market currently, and, you know, I look at Warren Buffett's indicator. Yeah, he has a tried and tested method. It's the most successful investor. And he looks at the stock market for when it's undervalued, fairly valued, overvalued. And at the moment, yeah, when you consider that the total amount of money in the stock market outweighs the GDP of the overall cost, you're looking at 192%, which is significantly overvalued. It's a vast amount. And when you consider, I know a lot of people say with gold, you know, you can put in the stock market and you can reinvest your dividends. But I think nowadays, if you can show me a stock that actually pays a dividend, you know, you're onto a winner yourself. Because when you look at Facebook, Netflix, I mean, it's startling. In fact, Facebook alone, yeah, the profits to earning ratio is 36. So their revenue is 36 billion. Their market cap is 552 billion. It's just, it doesn't make sense. They're not earning enough money. And if Facebook continue not to grow from now on in, it's going to take you sort of 36 years to get your money back. You know, that is, and a lot of people don't realize that. The only way you're ever going to make money into these companies is you just got to sell your share at a higher price to someone else who's coming along in the future.
So I guess what you're saying is that, all right, be careful investing in anything, stocks and shares and gold, but I suppose you're probably advocating not having all your eggs in the one basket, be it stocks and shares or be it gold. It's having a balanced portfolio. Is that what we're talking about, Paul?
I always recommend a balanced portfolio. Never, ever have all your eggs in one basket. But I always suggest 100% you should always have at least 10 to 20% in gold. That is your insurance policy.
Thank you, Paul. Thanks for joining us. I hope we can welcome you back on the show in coming months. That was Paul Withers, Chief Executive of Direct Bullion. Direct Bullion, if you're interested, you can find at directbullion.com, where the company sells you bars, gold coins, even a bit of silver if you're interested. That's it from Blytheway Business News for today. Thanks for watching.